Hello everybody, welcome back to my channel where we talk all things finance and investing. Today's video, I'm going to tackle the Vanguard LifeStrategy Fund series that is very popular here in the UK. So that's the subject of today's video. LifeStrategy funds, let's get right into it. Okay, so what are the Vanguard LifeStrategy funds? Well, really, these are a fund series that Vanguard developed a few years ago, which is basically designed for an investor, particularly a beginning investor, to buy one single fund, and with that, you'll get your asset allocation that you've chosen being a split in percentages between stocks and bonds. The idea, of course, is you buy one fund, and within that, you will have a strategy that will invest, for example, 20% in stocks and 80% in fixed income products, being bonds. Of course, that percentage allocation will change for each of the different funds, but basically you can go from 20% equities and 80% in fixed income right up to 100% in equities and 0% in fixed income. And depending on your risk tolerance, your experience, and most importantly, your time horizon for your investments, you would pick the fund that suits you the best. Of course, the advantage to this is that you can invest in one fund. You will get that asset allocation that you're after, and you don't have to do anything else from that point. Vanguard is the one who's going to handle all of the management of the underlying assets, and most importantly, handle any of the rebalancing that needs to be done. What do I mean by rebalancing? Well, of course, if you start off in a fund, let's say that's 60% equities and 40% in fixed income products, if the equity portion drastically outperforms the fixed income portion, then you may have found that your percentages have shifted. So now you're in 65% in equities and 35% in fixed income. So it needs to be rebalanced. So Vanguard would go in, liquidate some of the equity funds that are in there to bring that percentage back down to 60-40, your desired asset allocation strategy. So because of this, it's very simple, and it's a set it and forget it type of fund. You don't have to handle any of the rebalancing yourself. And of course, Vanguard will pick their underlying funds to make up your equity or your fixed income portion, so you get diversification more so than if you were doing this yourself. So you don't have to put the work in to pick your own individual funds to diversify. Vanguard would handle all of that for you. Sounds pretty good, but is it? So why are the LifeStrategy funds so popular here in the UK? Well, one of the main reasons that's quoted is they're pretty low cost. And when it comes to investing, low fees is the way to go always. It's a very important part of investment success. And Vanguard was sort of founded on that whole model, diversification and low cost. And the fees come in at around 0.22%. Of the value that you invest into the fund. So simple example, if you invest £10,000, then every year your charges in total would be £22. Doesn't sound too bad. And of course, for that 0.22% in return, what you would get is them handling all of the rebalancing and picking the underlying funds to make up the equity in the fixed income portion, giving you a great amount of diversification. All work that you don't have to do as an investor, so you can get on with your life, ideally trying to find ways to increase your income so you can find more money to invest in your portfolio. Of course, it's easy to buy these funds in typical investment platforms here in the UK. It's as simple as getting your account open, logging in, making a search for the Vanguard LifeStrategy fund that you're interested in, depending on the risk tolerance and time horizon that you have, and simply purchasing it, and away you go. You're done from that point. Okay, so as I mentioned a minute ago, they start with an equity allocation of 20% and a fixed income allocation of 80%. Now, this would be for the most conservative investors out there, in my opinion. So a general rule of thumb when it comes to investing and trying to figure out how much you should have in equities is 100 minus your age, and putting that in percentage term into equity. So simple example, if you're 60 years old, well, 100 minus your age would leave 40. So therefore 40% of your portfolio should go into equities. So therefore, depending on your age and your risk tolerance, you could pick the one that's right for you. Like I mentioned, they start at 20% equities, 80% fixed income, right up to 100% in equities. So depending on your age and your risk tolerance, you can pick the one that suits you best. Obviously, if you don't have much experience, you're just getting starting out in your investment journey, then you may want to go with something a little bit more mid-range or conservative, like the 60-40 portfolio, 60% in equities, 40% in fixed income, and there's a LifeStrategy fund for that. If you're younger, however, and you've got an investment horizon of 20, 30, maybe even 40 years, then really you don't need that much of a fixed income portion at all in your portfolio unless you have very low risk tolerance. So you should be maybe looking at the 80% equity or maybe even 100% equity. If I could turn the clock back to when I was 25 years old and really just getting started in this stuff, I would do it again at 100% equity. Okay, so what are some of the downsides of the LifeStrategy funds? Because up to now, it sounds like a perfect idea. You just buy one fund, you get your allocation, and off you go. Well, there's a few things to consider when you're looking at buying into some of these funds. The first downside, in my opinion, these aren't customizable in any way. You have no control over the underlying funds that are invested into your selected LifeStrategy fund. And then you're at the mercy of Vanguard and how they manage all of the underlying funds within it and the percentages accordingly. Secondly, they may not be the most tax efficient if you're doing these outside of an ISA account, an individual savings account, or a pension account, because there's a lot of rebalancing that can happen. There's a lot of sales, and there could be maybe some tax implications on this. Another drawback to this is if you were to buy a fund, say the 80% equity, 20% fixed income, as you get older and you may be interested to de-risk, for example, the LifeStrategy funds will not do this. You will be stuck at an 80% equity allocation and a 20% fixed income. Of course, you can always do it manually yourself. You could simply sell that fund and then buy one which has a lower allocation to equities if you wanted to de-risk yourself. But you have to be the one to do this. Okay, so what do I think? And would I invest in a LifeStrategy fund? The honest answer is I haven't, and I probably would not. I'd never rule it out entirely. Maybe at some point I would look to do this, but I'm still in the accumulation phase. And for me, I want a great exposure to the equity market, and I want to be able to customize it myself and make any changes myself without being stuck in a particular allocation. And I like to have full control over the instruments that are in my portfolio as well. And the LifeStrategy funds do not offer this. But there's another reason that I don't do this, and I probably wouldn't, and it's an important one in my opinion, and that is the fees. So it may sound like a low fee investment at 0.22%. Guess what? You need to add the fund fee from the provider that you're buying the fund on in their platform. And in the UK in particular, buying funds like this can be quite expensive. In fact, a lot of them are around 0.4%, 0.45%, depending on the provider that you choose. And that is in addition to the 0.22% that the fund itself would charge. So all of a sudden, you could be up around 0.6%, 0.7%, or maybe even more. And it may not sound like much, but if you compound that over a long period, 10, 20, 30 years, it makes a big difference to the pot that you would have at the end of that period. So keeping the cost low is a big thing. And I think you can get the diversification and the control by paying far less fees by using exchange traded funds, ETFs, which the LifeStrategy funds do not have. They are an actual unlisted fund themselves, not an ETF. Another thing to consider here is the returns. If you're looking to get a higher allocation to fixed income, then it's going to probably produce you less returns. Yes, you would have some peace of mind when the markets draw down and some protection against that, and that is important. If you're a new investor and that worries you, then you should definitely look at a higher allocation to fixed income in the LifeStrategy fund series. But let's take a look at comparison of the VUSA, which is an ETF that tracks the S&P 500, versus some of the LifeStrategy funds. Okay, so on the screen here, I have the returns of the LifeStrategy 80% equities, 20% fixed income versus VUSA. And although VUSA hasn't been around that long, it's only back to 2019, we can still make some comparisons here. First of all, look at the 5-year returns, and this is a cumulative return. So if you bought the 80% equities, 20% fixed income 5 years ago, your return would be around 48.5%. But look at the 5-year return of the S&P 500, 112, almost 113%. That is a massive difference, more than double. And of course, you've got the difference in the fees. The VUSA is only charged at 0.07% and can be done as an exchange traded fund, so it's even cheaper to hold it in your portfolio from your provider. What about the 10-year return? The cumulative 10-year return on the LifeStrategy 80% stocks comes in at almost 127%. Not bad for a 10-year, for sure, but look at VUSA for the S&P 500. 240%. That is a massive, massive difference. Now, of course, if you're going to be invested primarily in the S&P 500, you're going to have to take more risk with that and suffer more drawdowns. We saw that in April this year. We've seen it in COVID, and 2018, for example, there was a big sell-off as well. So you're going to have to be able to stomach those. But if you're able to do so, and if you're younger, you should definitely be able to handle it, then the rewards will be there for you as you accumulate and grow your portfolio size. So there you have it, the LifeStrategy Fund Series. They're an interesting option for you to look at, particularly if you're a new investor and you just want to set it and forget it. If you've never bought anything before, you may want to give these a look. And I'm always a proponent of anything that's going to help you to get invested rather than waiting on the sidelines being afraid to dip your toe in the water. So have a further look at the LifeStrategy funds from Vanguard. They're on their website. You can read all about them, read the key information documents and everything. And if it's going to help you get up and running in your investment journey, then why not buy one just to dip your toe in the water and get a feel for it? As you accumulate more experience, you can then take on a greater equity allocation or start to pick your own funds yourself and look at exchange traded funds like VUSA and others that you can find in global stocks like MSCI World and others, for example. That's my video on the Vanguard LifeStrategy Series funds. Really interesting option for you. Let me know what you think by leaving me a comment. Tell me what you think of them and what you invest in and what your portfolio looks like. I love to hear from my viewers all the time, so leave me a comment. As I said, hit the like button if you like the video. Subscribe to my channel if you haven't done so. So many viewers are not subscribed, so I'd really appreciate it if you take a quick second and just subscribe to my channel. In the comments below, I've actually pinned a link in there, so you can just click on that link very easily and then go and subscribe to my channel. So please do that. And if you want an idea how I would invest £10,000 right now if I had it and get it allocated into the stock market, with markets right now trading at all-time highs, no problem at all. I did a video on this a few weeks ago, how to invest £10,000 right now the smart way. Put a link to that right up there. So click on that. I'll see you over there. And as always, I wish you nothing but the best in your savings and investment journey.